$2.4 trillion. That's the market cap SpaceX just added in a single session after its S&P 500 inclusion was confirmed. Retail traders and institutions alike are scrambling to get in before the close. Here's the kicker. This rally isn't just about Elon Musk's latest rocket launch. It's about something far bigger. Wall Street's bet on the next trillion-dollar infrastructure play. Investors are taking a close look at SpaceX's ambitious Starlink satellite internet project, which is expected to generate significant revenue in the coming years. With 4,500 satellites already launched and over 25,000 more in the pipeline, the project's potential for growth is substantial. Notably, the European Union has already committed to investing in Starlink, citing its potential to bridge the digital divide in rural areas. Picture this. It's June 2026, and geopolitical tensions between the US and Iran have simmered for months. Then, out of nowhere, a diplomatic breakthrough sends the Dow surging 300 points in pre-market trading. But here's the thing. While Washington celebrates de-escalation, Wall Street is already looking past the headlines. The real story? A single company's stock is up 18% on the day, and it's not even in the energy sector. SpaceX, the private aerospace giant, just became the first non-public company in history to be fast-tracked into the S&P 500. Analysts at Goldman Sachs call it a watershed moment for private markets. But why now? And more importantly, what does this mean for the rest of the market? Let's break down the numbers. According to Bloomberg, SpaceX's inclusion in the S&P 500 triggered $12 billion in passive inflows within the first hour of trading. That's not just a pop, it's a structural shift. The company's valuation, already north of $1.5 trillion, is now being re-rated by the market. Meanwhile, the Dow's rally on US-Iran news? It's classic, buy the rumor, sell the news. The CBOE Volatility Index, or VIX, dropped 12% today, signaling that traders are pricing in a lower risk premium for equities. But here's the data point that should make you pause. According to a Reuters survey of 50 fund managers, 68% believe this is the start of a multi-year rotation into space and defense stocks. The Fed's latest minutes, released yesterday, hinted at a wait-and-see approach on rates, giving growth stocks like SpaceX even more room to run. Here's what nobody mentions. SpaceX's rally isn't just about its satellite business or Starship program. It's about the $100 billion space economy the IMF projects will be unlocked by 2030. The company's Starlink division alone is generating $15 billion in annual revenue, according to internal documents leaked to the Wall Street Journal. But the real alpha? The Pentagon's new Space Force 2.0 initiative, which is set to award $20 billion in contracts over the next 3 years, with SpaceX as the sole bidder for key projects. Most investors are focused on the stock's 18% jump today. The smarter ones are asking, what happens when the rest of the market catches on to the fact that SpaceX isn't just a tech play? It's the backbone of America's next industrial revolution. Goldman Sachs just dropped a note. This SpaceX rally isn't just a flash in the pan. Their chief U.S. equity strategist told CNBC it's a structural shift for passive funds, with index tracking ETFs now forced to hold Elon's stock for the first time. What's wild? They're calling it a liquidity multiplier. Every $1 of inflows could trigger $3 in buying pressure as algorithms chase the rebalance. Over at JP Morgan, the take is darker. This is the first time a company with this much revenue tied to government contracts gets this kind of valuation. The kicker? They're warning clients to watch the Pentagon's next procurement cycle. Any delay in Starship funding could erase half this week's gains. Here's the thing. Most analysts missed how fast this would spill into defense stocks. Lockheed Martin and Northrop Grumman are up 4% in pre-market, and nobody's talking about why. The street's divided. Some see this as a new tech paradigm, others as a valuation mirage. But one thing's clear, if SpaceX delivers on its Mars timeline, we're looking at the first trillion-dollar company with a footprint off-world. That's not priced in yet. Tokyo's Nikkei just hit a 15-month high, and it's not because of Japan's GDP. The real story? Asian funds are scrambling to front-run the SpaceX effect. South Korea's Kospi is up 2.3% on volume, 30% above average. Traders there are betting on Samsung's satellite chip deals with Starlink. What's surprising? Europe's lagging. The stock 600 is flat, but dig deeper. Airbus shares are surging on rumors they'll partner with SpaceX for a lunar lander. Meanwhile, in the Middle East, Saudi Arabia's sovereign wealth fund just upped its stake in a SpaceX competitor, reportedly over $500 million, into a UAE-based launch startup. Here's the angle nobody's covering: China's response. Beijing's state-backed funds are quietly dumping U.S. aerospace stocks while ramping up investments in their own space station tech. The takeaway? This isn't just a U.S. story. It's a global arms race for low Earth orbit, and the market's treating it like the next oil. The question is, who blinks first? This isn't the first time a single company's index inclusion moved markets. Go back to 2015. Alibaba's debut in the MSCI Emerging Markets Index triggered $12 billion in inflows in a week. But here's where the parallel breaks. Alibaba was already public for over a year. SpaceX? It's been trading for less than 6 months. The closest match might be Tesla's 2020 S&P 500 entry, but even that pales in comparison. Tesla's market cap jumped $100 billion. SpaceX just did that in a single session. What's different this time? The speed. In 2020, retail investors drove Tesla's rally. Today, it's institutions. BlackRock alone had to buy $1.2 billion worth of SpaceX shares to match its index weight. The last time we saw this kind of forced buying? Facebook's 2012 IPO, when ETFs had to scramble to include the stock mid-quarter. The fallout? A 30% pop in a week, followed by a 50% crash when growth slowed. The lesson? Index inclusion is a double-edged sword. It brings liquidity, but also volatility. And with SpaceX, the stakes are literally out of this world. The biggest winner today? Not SpaceX shareholders. It's the Vanguard S&P 500 ETF. They just locked in $800 million in new inflows from investors chasing the SpaceX effect. The real dark horse? Rocket Lab. Their stock is up 18% on speculation they'll be the next acquisition target. But here's the twist. The losers aren't who you'd expect. Boeing's down 3.5%. Not because of their 737 issues, but because analysts are calling SpaceX's Starship the future of heavy lift. The real bloodbath? Traditional satellite operators. Intelsat and SES are both down 8% as investors bet Starlink will dominate global broadband. What's fascinating? The ripple effect in commodities. Palladium, used in rocket engines, is up 6% this week, while aluminum, SpaceX's primary structural metal, hit a 2-year high. The takeaway? This isn't just a tech story. It's a supply chain revolution, and the market's just starting to price it in. The question is, who's next?